Welcome. We are live from Hoag Medical Center in Newport Beach, California. My goal today is to educate, bring awareness to the viewers that are joining us today, and establish a line of communication from this point forward, and be able to help each one of you in the near future with your Medicare needs. As I go through the slides of this presentation, kindly enter your questions or comments in the chat box below, and I will address them at the end of the presentation. So with that, we'll start. The topic today, as you know, is understanding Medicare supplemental plans. My name is Patty Contreras. I am your host. Let me give you a little bit of background of my experience in the business. I've got 30 years experience in corporate banking, commercial REO, and insurance industry. 15 years of that, I have been an independent-owned boutique-style agency. I did graduate from UCLA in 1991. I do have a diverse background, extensive knowledge in Social Security, long-term care, disability, Medicare planning, and everything that impacts income. As a wealth planner, I also am an expert in health insurance and save money strategies. I do work under a team environment with other business leaders that bring an additional 20 plus years of extensive knowledge within the U.S. I'm also licensed in 13 states, including my resident state, Arizona, Arkansas, California, Idaho, Florida, Maryland, Michigan, Nevada, Oregon, South Carolina, Tennessee, Texas, and the state of Washington. Let's go over the parts of Medicare. As many of you viewers may know, Medicare covers 80%, and it is comprised of Parts A and B. Under Part A, you have coverage for inpatient hospital care, inpatient mental health care, skilled nursing services, hospice, and some blood transfusions. Under Part B, you have your physician's services, your doctor office visits, outpatient hospital services, ambulance, outpatient mental health, labs, durable medical equipment, outpatient physical and occupational therapy, along with speech language therapy, and some preventative. Medicare does have gaps, and let's go over what those gaps are. As I said earlier, Medicare covers 80%, but under Parts A, in an inpatient situation, you have a $1,484 deductible that is due within the first 60 days. From day 61 to day 90, it's $371. From day 91 to 150, it is $742 per day. And after 151 days, you have no coverage. Under nursing, the first 20 days, if you are confined in a nursing or skilled, the first 20 days is zero out of pocket. And from day 21 to 100, it's $185.50 per day for 2021. And after 101 and beyond, you have no coverage. This is where it's important that if you have a situation and are confined beyond the 100 days that you have lifetime, it is important that you have long-term care insurance or obviously meet the requirements for Medi-Cal or Medicaid in other states. For 2021, the premium for Part B is $148.50. And obviously that cost will vary based on your income. It does have a $203 deductible per year of the 20% of the Medicare approved services that are covered. And there is no out-of-pocket limit. This is important because if you have beneficiaries that decide to keep only original Medicare, you have no cap on the 20% that you are responsible. And this is where it's going to be important to consider other options. I also wanted to preview the per month cost for Part B based on your income. So the average, most people will fall under, if you file or are taxed as an individual and your income is $88,000 or below, or if you file jointly or file married, filing jointly $176,000 or less, file married and separate, again, $88,000 or less, your monthly for the Part B is $148.50. Obviously, when your income increases, if it's between $88,000 up to $111,000, then now you're looking at a $207.90 per month. If your income is above $111,000 up to $138,000 as a single tax earner, or if you're filing joint and your income is between $222,000 to $276,000, then your monthly is now $297, and so forth. The highest being $503.90 if your income is above $500,000 per year. So this is a very important chart. One of the areas that we will discuss when I meet with you is, where you fall on that income chart, so that you know up front what that premium amount for your Part B will be. Another area that's very important before we dive into the specifics of a supplemental plan are the enrollment periods. The initial enrollment period, referred to as IEP, it is a 7-month enrollment period. It begins 3 months before that beneficiary's first entitlement of Medicare Part A and B, their birth month being month 4 and 3 months after. Then you have the annual election period. For 2021, it is October 15th through December 7th. Once you make that selection, you are locked in for the year. And then following that, you have the Medicare open enrollment period, which is where folks that have enrolled in an MA plan or an MAPD plan, they have the ability between January 1st and March 31st to disenroll onto original Medicare. Special election period, enrollment period, SEP, that is granted when you have a qualifying event. For example, if you're moving from one state to another or from one county to another, that's a qualifying event. Loss of coverage. If you are on an employer plan and you are losing coverage, that is also another qualifying event. Or if you're aging into age 65, that is also a qualifying event. So that sums up, the details of enrollment periods in Medicare. Then we have 2 choices. You have the MedSup choice or the Part C, also referred to as Medicare Advantage plans. Some folks decide to keep just original Medicare, and that's usually about a 2% of the population. The majority of the folks are either enrolling in one of those 2 options. Today we're going to cover the MedSup option. They are primarily sold, as many of you know, by private insurance companies. They're designed to cover the gaps in Medicare for Parts A and B, sometimes also called Medigap. There are 10 standardized plans that allow us to look at an easy comparison. Massachusetts, Minnesota, and Wisconsin have different plan designs, and they're also regulated by state and federal agencies. I, as an independent broker, I'm contracted with most carriers in the states that I am licensed, so we'll be able to dive into the different price and options that each plan offers. This chart details really what those plans cover, and I try to hone in on Plan F and Plan G. Plan F, these are the recipients that had turned 65 prior to January 1st of 2020. Obviously, if you are aging into Medicare in the coming months or this year, then we would be looking at Plan G. And Plan G is identically the same as Plan F, with the exception that under Plan G, you pay a $203 deductible, and then everything else is 100%. Here's also an example of Medigap plans. After January 1st of 2020, they do have a Plan G high deductible option. This is not an option that I'm usually fond of, because I'm a firm believer that whenever you buy something that is less expensive, in the long run, it ends up costing you more. And the way Plan G high deductible works is it has an out-of-pocket limit of $2,370. Here's an example. If you have a 65 female, and we're using the zip code in Newport Beach, California, the regular Plan G is going to price about $152.56 with United Healthcare. A Plan G high deductible plan is going to price in the 48.26 range, and it is with Mutual of Omaha, which is also another great carrier. But the difference in premium is going to differ on that out-of-pocket limit. That means that benefits do not begin until you've paid up the first $2,370. A high deductible Plan G, Medicare still pays Parts A and B, the 80%. The remaining balance is paid by the plan member until it reaches that $2,370 out of pocket. Here's an example. If you go to a doctor visit, Medicare approves $100 of that visit. Medicare pays 80%, $80, leaving the 20%, $20 for the client, which basically gets applied to that $2,370. If the member is hospitalized, Medicare pays for the hospitalization minus the Part A deductible, which is $1,484 for 2021. They apply that towards the deductible. So in essence, like I said earlier, you first have to pay up the first $2,370 before benefits begin. A Medicare supplemental plan, plans F and G, are also offered, as I mentioned, in high deductible plans. Price is going to be lower, and it's going to vary based on the state. You're not going to have the variety of options of various carriers. Plans K and L, also, you would need to meet that out-of-pocket limit and your yearly Part B deductible. The Medigap plan pays 100 of the covered services for the rest of the calendar year. And obviously Plan N pays 100% of the Part B coinsurance, except for a payment up to $20 for some office visits and up to $50 copay for emergency room visits that don't result in an inpatient admission. In a nutshell, like I said, I highly lean towards the plan that has the upfront benefits. Usually that tends to work for most folks because unfortunately we don't have that crystal ball to know if you're going to have a bad year. So in the long run, I'm a firm believer that, you know, when you get the plan that has the most comprehensive, it ends up working out a lot better long term. Medicare supplemental plans also, you know, they are the secondary payer to Medicare. It pays after Medicare has paid the initial 80%. They are guaranteed renewable. You cannot be canceled as long as the client is paying their premium. You have the freedom to see any provider, facility that accepts Medicare. 95% of all physicians and 98% of all facilities. Clients can enroll anytime during that open enrollment. And more importantly, you have a guaranteed issue in that initial enrollment period, meaning that it's not going to be underwritten. Clients must purchase separate Part D if they want prescription coverage. So in a nutshell, when I'm asked, well, you know, what am I looking at in terms of cost? If you are coming off of a PPO plan through an employer, you know, 152 ballpark for Plan G, and then we add that prescription plan that's going to be in the range of 30 to 50 bucks a month. So, you know, all in all, and under $200, you've got pretty decent coverage. Here's another example of the Medicare supplemental plans where clients pay a premium. Premiums are usually changed annually. The better the coverage, the higher the premium. Plan F obviously being the highest premium, and Plan K, if available in the area, is generally the lowest premium option. Why are supplemental plans better? Well, you're fully insured, it's guaranteed renewable, the annual rate increase is minimal, depending on the carrier. Any provider or facility that accepts Medicare, you're able to not have to worry about copays, coinsurance. It is unrestricted enrollment, there is no underwriting, and you add the Part D separately, and it's federally and state regulated. In a nutshell, I always recommend, especially if the beneficiary has a pre-existing condition, it is usually best to have a supplemental plan because then you don't have to worry about referrals or not being able to go to a particular provider because they do not take HMO plans. And this is where the supplemental plans are going to shine. Let's look at some case studies. Matt, he lives in Seattle, Washington. He's 68 years of age, retiring from his job, dealing with a chronic condition that has him visiting his doctor on a monthly basis. advised that he will eventually need specialized surgery in the future, and the doctor recommended that he go to Mayo Clinic to have it done. He signed up with Aetna Plan F. Aetna is an A-rated carrier with stable rate history. It allows him to use his Medicare benefits at Mayo Clinic when the time comes. And Aetna does have also a group insurance carrier. So, it is a carrier that this member is familiar with, and so the transition is pretty simple. Here's another case study. We have Kurt, lives in Nashville, Tennessee, in Davidson County. He is 63 years old, qualifying for Medicare due to a disability that keeps him from working. He is treated with pain management medication and visits the doctor regularly. He fears that he will need the help of a wheelchair in the future to stay independent. You may need to move into an assisted living facility. He lives off of a fixed income with Social Security and his 401k and cannot afford any surprises. This is where it's important, signing him up with Mutual of Omaha Plan F. The rates are the same as someone who's 65, and they have averaged only a 2.1 increase since 2013. He likes that his monthly health care costs are fixed and found an affordable Part D plan to help pay for his meds through mail order. Here's another case. We have Jenny that lives in Newport Beach, California. She is 65 years old, has a lung disorder, sees specialists at Hoag in Orange County and at UCLA in LA County. Her doctors do not accept HMOs. She wants the freedom to access doctors without a referral. She signed up with AARP UHC Plan F, added an affordable plan, Part D plan for her medications via mail order, and likes knowing that her monthly costs are fixed and reasonable and will not be billed copays nor coinsurance. She travels to various states and is able to access doctors across the U.S. So in closing, think of Medicare supplemental plans when a client doesn't want to pay copays, coinsurance, when a client doesn't like the idea of a network, when a client cannot afford any surprises that is at $1,500 and above. So thank everyone. I'm going to check right now. I believe we've got some questions. The first question is, how is the income calculated? Are the IRA distributions included? Great question. So the income is calculated based on what you are getting through your retirement, including Social Security benefits. And then we look at that chart that has the, let me go back here. So depending on where you fall, if you are single or you file joint, we would include any retirement that you're receiving. So IRAs, 401ks, Roth IRAs, including the income that you may have already turned on with Social Security. The second question is, how does it work if my employer coverage is still in force by the time I reach 65? That's a great question. I'm a firm believer that once you reach 65 and are eligible and entitled for Medicare, the benefits are far more comprehensive. And the way it works is that your employer needs to release you from the group benefits about 30 to 45 days before you age into Medicare, so that we are able to submit the application to Medicare 30 to 45 days in advance, and you're able to be active in the system by the first month of your birth month so that you could be effective in Medicare. A lot of employers are more motivated to contribute the amount that you fall under each month under Medicare, because it is going to be a lot less expensive. And what I mean by that, typically if you're 64 years of age, if you're under an employer plan, your premium is going to range somewhere between $1,300 and $2,000, depending on what tier plan you are on through your employer. So when you discuss that with your employer and bring them the cost of $200, they are going to be a lot more motivated into contributing that amount versus the higher amount through an employer plan. So that's it. Thank you so much for the questions. I think we might have a few more. In the meantime, please make sure that you are able to take down my information. I only see clients by appointment. I do have an office in Newport Beach, Huntington, in Inland Empire. So I am hoping to be able to connect with one of you at the end of this presentation. And we have one last question. What insurers does your firm represent? Well, I represent, the majority. Aetna, United Healthcare, Cigna, Blue Shield, Anthem, all the major players in the space of Medicare in all the states that I am licensed, and that's important because a lot of times we look at shopping based on the rates, with these various carriers. And I've got another question here. Then is my ER plan secondary and I won't need a MedSup? So I'm not sure if your emergency plan, if the emergency plan is a comprehensive medical plan, then Medicare will replace that. The benefits become much more comprehensive. And like I said, today's discussion is a MedSup. If your income, is such that a Medicare Advantage plan is going to be the best, as long as all your doctors are within that plan, then that's what we're going to look at. So there's an analysis and some questions that I go through with members to see what's going to really make sense based on your situation. But in all, we do have a lot of choices. We do have a lot of plans to look at, and I'll make sure to point out what pros and cons each carrier has, because obviously that is part of the discussion when I'm meeting with clients. Some carriers tend to increase rates quite frequently. And what I mean by that is 6 months ago, I moved one of my clients that I had enrolled under Blue Shield 2 years ago when he turned 65, and his wife turned 65 recently. And when we looked at his rates had increased from $130 to like $220 a month. And in that case, we were able to shift gears for him, move him to a sup plan with a different carrier because that other carrier had rates that were a lot more stable. And these are the kind of conversations that I go over when I meet with you, either virtually or in person. My office does have the capabilities to extending in-person visits, if that is your preference. We are COVID compliant. I do temperature checks. Masks are required at all times. And but we could also, accommodate Zoom capabilities for virtual meetings as well. And with that, again, this is my contact information in Newport Beach, 949-769-7009. Huntington Beach, it's that 714 number. Those numbers would be the best thing for you to contact first, and then we get you on the schedule, or you can also send me a text. And with that, I appreciate everyone joining us today. This was a lot of fun because it's the first live webinar that we've had a variety of questions, great questions. Thank you for making it fun, and hopefully I'll be able to meet with each one of you in the near future.